Hello everybody, in this video we're going to have a look at our Cashbook module, and there's quite a lot going on in the Cashbook module which is more than you would normally expect. Okay, so let's start here. The Cashbook, the system is split into inputs over here and then reports over here. We'll be looking at them individually. Let's right click on here, go to our inputs, and now we're going to our Cashbook here. So now this is our input side of our Cashbook. Now here's a sub menu. We're going to look at our transactions. So let's go and have a look at the different transactions. This is where we record banking information, and of course there's lots of different ways of getting the information in there. We can do it via Dunkirk, we can do it via import, we can also do it directly using the banking system. So those are really the ways in which you would do it. Now let's have a look at this first item here. It's called bank accounts, and what it is, it's a data population that holds all bank accounts. Okay, we're not concerned whether you've got bank account 1, 2, 3, or 4. They all go into this item via the import mechanism. So you would have them actually sitting in here, but they're all bank accounts as such. Okay. Then we have our petty cash over here, and we also have the recharge of the petty cash. Just to tell you briefly, our petty cash is split into two sections: the banking side, the cash side, and all that does is that when the cash goes out, it goes to a petty cash debtor. When it comes back, a refund, for example, comes back off the balance, then that goes back in and the debtor is credited. And that's all that does. We have a separate system where we record the actual documentation, and these end up, the value of those documents credit the debtor, and then we see if there's a balance left over, and that must obviously be refunded. Okay, so that's how that system works. Now down below here we have what's called the counterparty transfer system. Okay, and this is very important. We have counterparty transfers where we have cash, but the cash isn't paid out, okay, by us, by the company. It's paid out by, say, a shareholder. We take the classic example: there's an expense is paid for by a shareholder. Okay, so the shareholder pays on his credit card. That's where the cash actually happens. It doesn't reflect in our cash book on our bank account, but we've paid the expense creditor. So we put to essentially a journal entry which would debit the expense creditor and credit the shareholder. But we want to record this under cash because cash did actually take place. Okay, it's just it wasn't our bank account, but from a true reflection of the nature of the business, it should actually be cash. This becomes more relevant if you take something like capital expenditure. So say, for example, a financial institution pays a vendor for some big piece of plant, and maybe it's millions of rands, okay, that get paid out. We want to reflect that cash flow because we've had an investing activity, and we want that to show up on our cash flow. Excuse me. And so this is why we have the counterparty transfer system, and it's quite an involved system. We'll have a separate video purely on the counterparty transfer system and how that actually works, and we'll do that shortly. Okay, so let's come back to here. Now we go back to bank accruals. Now the way Ark works with the bank, everything is accrued. We don't allow cash to go directly to an expense account. This is actually a short circuit. You must take the invoice, whatever, normally there'll be an invoice representing that, and you must accrue that invoice, and you must go through the normal approval process, and you must reflect the valuated tax. We've got to have these items go through, and then we end up with a counterparty who has to be paid, and that's the way we work it. And it's actually very, very useful to actually keep that system, a very clear separation between accrual on the one hand and cash flow on the other. And what we're doing here now is even with the bank, we're pulling the numbers off, creating a mini bank creditor or debtor in the case of interest received, and then the cash is used to settle those accounts. Okay, so we can reflect on each of these ones. Now here we have the bank transfers. This is where we take transfers between one bank and the other, and they must come together and match off, and we prove that they do in fact match off and that they agree to the journal entries. Then we have an interest calculation, both for interest paid and interest received. We're going to calculate those items and do a test. Obviously, if there's a few rand out, that doesn't really matter. But if it's wholesale, if it's like double or something of this nature, then you want to go and have a look and talk to your bank and see who's, and see where it's actually happening. Now, these last two are quite good. The available funds compares your current overdraft position, if you're in overdraft, to what your credit limit is, and you can see what kind of percentage that you have. If you're in funds, it doesn't really apply. But if you're in overdraft and say you're at like 60%, then you want to be able to see this. And then as time goes by, you can see when you're getting closer and closer to that limit. It's quite a useful report to have. And then the stress test is also a very useful report. Here, what we do is we're looking at the cash flow, the effect on the cash flow if you either have a squeeze of margin on the one hand, or you have rapid growth. Rapid growth can be just as damaging as having a margin squeeze. Okay, and if you're growing, you've got to see how you're going to manage the funding of that growth. So the stress test is actually quite useful for that one there. And this is why we're introducing some extra reports that are actually very useful for clients. Let's come back to here. Now this one here is the banking system. This only happens when you're actually running live. Okay, so what we have here is a Zap system, but here we can do an extract from your online banking. The banks don't do it very nicely. They either drop information or they give you a terrible looking report, but we can handle that. That's not a problem. So you simply drop in whatever comes out. You simply take your whole of your transaction history on there, simply go Control A and drop it into the landing page, and we'll sort it out from there. And that's for each bank account. So you just need one for each bank account, and then we'll sort that out. So that's how we can load your banking information well when we're running live. Okay, and then we have what we call a bank reconciliation. Here we have a PDF reader, so we can take a PDF file from the bank and we can read the PDF. Again, it comes out very messy, but we've got algorithms that will sort that out, shape it up, and then we can compare exactly what's on the PDF to what's in the Cashbook, which should be identical. Should be one-to-one, should be in the same order, same date. Everything should be the same. Otherwise, there's a problem there. So, and then of course we have journals, as you can just see the effect of your journals coming through over here. So that is the whole of the transaction system. That's the inputs. Now, and we come back to here on the debtor side. It's what am I doing here? Reports. On the output side, it's very simple. Just have the one file. This is your cash book, which brings all of that item together. And let's go and have a look here. I'll drill down into it now. Okay. Now what you can see, there's your opening balance, but these are what we call counterparty dimensions. Our term for that is KIM, KYM. So we use the KIMs, okay, different items. So for example, employees are a separate set, that we can see all the cash paid out to employees. And then we have additions creditors. So we have additions to fixed assets. That's the cash paid to those creditors. And this becomes very useful. It becomes tantamount to our cash flow, and we can spin our cash flow off from here. So it's a very useful way of actually doing it. This number here, 1990, agrees to our cash flow. So let's just have a look at here. That's our cash flow. That's our balance on our balance sheet. So let's come back here to our financial reports here. Come back to statements, come back to our cash flow, and now we can scroll down to here, and here's our 1990, that's the 2470 that we said was the balance. And if we go back to our balance sheet here, okay, and now we can come down to here, and there's our 2470, which cash and cash equivalents. So it's very, very organized and very pleasant in terms of how that all fits together. Okay, and there we go. That's what we want to show you just for this overview. We'll have separate little tutorial videos for each of these things to show you exactly how they work in the near future.